Bitcoin is first going to flip gold. And when it flips
Right.
gold, it should be about a $500,000 coin asset.
Right. Right.
But I think Bitcoin is also going to replace bond indexes.
Billionaire investor and MicroStrategy CEO Michael Saylor has stated the qualities of a good asset in a recent interview. The billionaire invested in big tech firms like Amazon, Facebook, Apple, and Google in the past decade. He explains that those stocks were profitable in the early stages because of the firm's unique services, and people had not yet realized how profitable they were. Once millions of people flocked to the space, Saylor adds that the stocks stopped being as profitable as the early stages. He also explains that Bitcoin has all the attributes he saw in those big tech stocks, plus the advantage of still being in its early stages. Welcome to Savvy Finance. In this video, we examine Michael Saylor's long-term prediction for the world's biggest cryptocurrency. In a recent interview, the CEO shares the development pathway for Bitcoin and suggestions for new investors trying to cope with the asset's increasing volatility. If you find the video interesting, please give it a thumbs up. Let's dive right in. Michael Saylor of MicroStrategy is a well-known member of the cryptocurrency community on YouTube and Twitter. The billionaire is also accredited with convincing many institutions to invest in Bitcoin. Currently, MicroStrategy holds over 125,000 Bitcoin, the most for any institution in the world. In a recent interview, Saylor shares some amazing insights into the market and why he has chosen to invest in Bitcoin. He begins the interview by talking about the big tech firms he invested in after his company went public in 1998. He explains that he was attracted to companies like Facebook, Amazon, Apple, and Google because of their unique services and network reach. Unlike the brick-and-mortar establishments that preceded these companies, they could simultaneously sell their products and services to hundreds of millions of customers. Listen to Saylor's thoughts on what constitutes a good investment.
I saw that the world was going to transform into companies with 1 billion customers like Amazon and Facebook and Google and Apple. And I thought if you can have a digital network with 1 billion customers and you can ship a product or a service down that network via electricity, then that's an unstoppable competitive advantage.
Right.
So I concluded, Amazon was going to defeat the 10,000 smallest retailers because they had one storefront and they could upgrade their storefront instantly every minute of the day. And that's impossible for a physical bricks and mortar store to compete with.
Right.
And the same is true with Apple, where if you have a device in 1 billion people's hands and you can ship a product to it over the weekend, nobody can compete with that. No one else can ship a product to 1 billion people over the weekend for a nickel. And so those are pretty unstoppable franchises at that point. I think the best investment ideas in the last 30 years, they're dominant digital monopolies that everybody needs, nobody can stop, and very few people understand.
Right.
And Amazon was like that. Apple is like that.
Right.
Google is like that. Facebook is kind of like that. And Bitcoin is like that.
Yes.
They all have the same characteristic. Few people understand it. When few people understand it, but everybody needs it and no one can stop it, that's when to invest.
Right.
You could say today that everybody kind of understands that they need Apple and Google and Facebook and YouTube and Amazon. They understand it today. And so those aren't so good investments anymore because once a few 100 million people agree with you, you're not early. So people disagreed on Apple and Amazon a decade ago, and they were good investments, and they went up by a factor of 20 from there.
Wow.
And people disagree on Bitcoin today, which is why it's a good investment.
Right.
Because if all of the issues were worked out, then it would already be 30, 40, 50 times more expensive.
Wow.
And it wouldn't be controversial, but you would lose 97% of your wealth.
About 300 million people currently use crypto globally, and the figure is expected to grow to 1 billion people by the end of 2022. Unlike the first sets of investors, new investors are very jittery during Bitcoin's well-known dips and crashes. For members of this group, Saylor has a piece of simple advice. The billionaire explains that people who put money in Bitcoin must first identify if they are savers, investors, or speculators. For savers, Saylor advocates holding Bitcoin for a minimum of 10 years and a minimum of 4 years for those who wish to invest. Listen to the investment guru's suggestions for savers and investors here.
The question really is, are you investing or are you saving or are you speculating?
Right.
if you're a saver, you're not really investing or taking a risk on a company. You're converting a weak property to a strong property.
Right.
If you're an investor, you have to have at least a 4-year time horizon.
4 years.
Okay. If you're investing in something thinking you'll make money in 4 weeks, you're not really an investor, you're a speculator. Now, if you don't know what you're doing and you're guessing, you're just guessing, you're just betting on black or red, I call that speculation.
Okay.
If you have a methodology, if you have computer programs and you have proprietary algorithms and you have special information that no one else has, you can call yourself a trader. Right? Maybe you're a trader, but either way, you're a trader or you're a speculator, but you're not really an investor. Okay. Because if you're an investor, you have a thesis that's going to take years to play out. So I would say that if you're looking at something as an investor and you're not going to hold it for 4 years, you're just speculating, you're gambling over whether the EPS will beat the numbers that the street expects next Tuesday, right? And nobody knows. It's coin flip. When you're buying Bitcoin, if you understand it, I don't think you're investing and I don't think you're speculating. I think you're saving. And if you're saving, you're thinking, I'm going to buy it for a decade. And what I would say to people is, if you're not going to hold it for a decade, for 10 years, I wouldn't even hold it for 10 minutes. I think the right way to think of it is, if there's money you need in the next 12 months, you probably should store it in a currency, like a stable currency. If I live in Korea and I have rent coming due in Korean won, then I would hold some cash balances in Korean won.
Right.
If I have money that I wish to save and give to my grandchildren, 10 to 30 years out, or even 100 years out, I want to keep it in my family. Then you should be putting it into a portfolio of property, scarce, desirable assets. So property, what is it? Bitcoin is digital property. Otherwise, buy the most valuable land, or you might buy trophy collectibles. Leonardo da Vinci paintings, Picasso, something that is rare and desirable and scarce. If you buy a portfolio of property that is, it's not a company, it's not a currency, it's something that affluent people will find desirable in 10 to 30 years, then that's a saving strategy. If you wish to take risk, if you wish to invest in companies, you're an investor.
Right.
Now you might decide that you think that Apple is undervalued or Google is going to perform well, or you might invest in a private company.
Right.
Okay, well, the advantage of those things is they generate cash flows, but the disadvantage is they have risk. So if you want to take that risk, you can, but it's not the same as owning a city block in downtown Seoul, Korea. So my answer to anybody would be, don't check the price of it every minute if you're a saver.
Saylor also talks about the continued mass adoption of Bitcoin by big corporations and firms. He names Jefferies, an investment bank, Silvergate, a commercial bank, and 2 of the big 4 accounting organizations, KPMG and Deloitte. He explains that these giant corporations are in crypto to offer more services to the clients and show their acceptance of the industry. Here is Michael Saylor's explanation, as well as his long-term prediction for Bitcoin.
KPMG is MicroStrategy's auditor.
Yeah, right.
So we're very happy to see them do it. We've done business with Deloitte, and the auditors, the accountants, are finding that there's massive demand for cryptocurrency related accounting services. So from their point of view, it's a good business decision, but I think it's also their way of signaling to the market that they're very Bitcoin friendly and crypto sophisticated.
Talking about the price of Bitcoin, do you see $1 million Bitcoin in our lifetime?
Yeah, sure. Yeah, I think that Bitcoin is first going to flip gold, and when it flips gold, it should be about a $500,000 coin asset.
Right.
But I think Bitcoin is also going to replace bond indexes and real estate and other sorts of property investments. And I think there's no reason why it shouldn't go to $100 trillion. That would put it at $5 million a coin. So I definitely think it'll happen. Like the question is really just over what time frame.
Saylor sees Bitcoin flipping gold and other popular investment assets sometime in the future. The current market cap of gold is over $11 trillion, while the recent dip from the ATH has sent Bitcoin's market cap to around $800 billion. The number of Bitcoin in circulation is below 19 million. Before the asset's market cap can exceed that of gold, each coin will be selling for hundreds of thousands of dollars. However, if institutional adoption continues on the same trajectory, this will not be an impossible feat for Bitcoin. Have any thoughts, comments, or observations? Please share them in the comments section below. Also, ensure you drop a thumbs up for the video. Thanks for watching.